I love hot, fun, exciting topics like insurance, but we are at the right place for it. It is super important. Glenn, why don't you tell us a little bit about yourself and why they should listen to you about what's going on with institutional insurance?
Yeah, cool. I feel so far away from you up here, but great to be here, everybody. I joined the insurance industry straight out of college, and I've been working in digital assets since 2017. So it's an area that was passionate of mine, but realized very quickly that risk controls and insurance is going to be a critical part for businesses to scale. And there wasn't really anybody else doing it at the time. So it's like, oh, this is a good niche for me, something to fall into. But it's been a very, very slow adoption curve because, for right or wrong, like the industry has had a unhealthy relationship with insurance, partially because you have all the bad actors that have shaken out of the space, giving a blanket bad relationship to insurance. But then you also have the insurance companies that are pricing out a lot of the businesses. So it's just been friction for years and years. But now we've definitely reached a different scale with regulation and adoption of institutions to where people are pushing to a much healthier place, and capacity is growing, prices going down, and it's enabling a lot of this scaling that we're starting to see in the institutional side.
Yeah, the Wild West that has been crypto has been incredibly risky. I mean, just October 10th, all of these stablecoins disappeared or were proven to be under collateralized. How do you, pricing risk is what insurance is. What does it take to appease institutional grade insurers? What are they wanting out of crypto? What interests them about stablecoins?
Yeah, it's an interesting question. I mean, I think right now we're very early days of adoption for stablecoins. Insurers, where we're seeing it play in insurance right now, most commonly is the industry is using captive structures, and certain jurisdictions are now allowing stablecoins as collateral for insurance. We've seen it in iOS products as well, as a quicker way to move in and out of those markets. But for the most part, for insurers, I think that our industry is very reactive instead of proactive. But when you have things like the Genius Act and you start to see some of these companies successfully deploying applications, there's a few reinsurance companies that are using stablecoins. It's slowly kind of starting to push that narrative, and it works like a lot of other things in crypto, where it's gradually, and then suddenly, as soon as there is like some sort of gating factor that comes down, everyone gets a lot more comfortable. It becomes a lot more commonplace.
Cool. So using it as collateral, accepting it for payments, that's kind of the use case of stables. You helped with a deal between Paxos and Coinbase. Can you talk about some details about that deal, what they were looking for, what you're able to enable?
Yeah, and I think that kind of goes along with the theme here, is that we see the industry is traditionally reactive. At Aon, we want to be proactive. Something like crypto payments has been something that I've been passionate about. My whole time in the industry, I've seen it as something that we could bring to crypto. But it wasn't until the passing of the Genius Act that it really actually becomes a reality, because there truly are, as a large global corporation, you have so many gating factors, so many risks, so much regulation, for so little benefit at the corporate level. But ultimately, we see it being that, over time, stablecoins is going to be another rail for payments, another rail to reduce FX risk, do cross-border transactions, instant liquidity, 24/7 access. And now that the Genius Act is passed and we see all these other corporations that are using stablecoins more commonly, it's like, okay, a lot of this stuff has been de-risked. We think this is where the ball is moving. So we want to start, communicating to our partners that that's an area that we, understand that we're going to be migrating to. And we want to be leaders and not followers in our very reactive bubble that we live in. And so with the Paxos and Coinbase, we being that they both deal a lot in stablecoins, we said, why don't you pay us that way? And of course, they were very excited to do so. They want to pay as many of their partners like that. They're already moving their internal finances on stablecoins and try to pay vendors on that. It was a limited scope for us. We didn't, in this transaction where we pay, many different insurers, we don't pay them all in stablecoins. Unfortunately, they're not set up to receive on the same rails that we are. But it still made it for a seamless transaction for premiums because for Paxos and Coinbase to pay us, Paxos PYUSD on Solana and Coinbase USDC on Ethereum for all of their insurance premiums was a micro case of what over time we kind of see it just being another option, cash, check, ACH, stablecoin. But ultimately, like a lot of things are going to have to change before we can do that at scale with all of our partners, and we get to realize many of those benefits that come with it. But I think where we are coming from is that as a large global institution in 170 plus countries, this is going to be something that we're going to deal with. So we wanted to communicate to the industry that we're not only helping people manage risk in this space, but we're also, actively dealing and exploring some of these issues ourselves. So we have a intimate understanding about what is needed, what is lacking, how do you protect yourself, and how do you scale.
You've brought up the Genius Act a couple of times. What about it has changed how you guys view stablecoins, and has this impacted how you're able to talk about stables or crypto sides of businesses and digital assets to some of your vendors and other insurance companies?
Yeah, I mean, I think the Genius Act is critically important in de-risking it for business, in who you're talking to, and your partners, going through internal risk committees. The Genius Act is, we're still in rulemaking. So we don't know what it actually formally looks like, but we want to use Genius aligned stablecoins right now until there is further guidance, which also makes it a little bit more limiting on what we're able to do globally. But that's fine because I think the way that our, executives and our partners and internal stakeholders look at this is, well, we've now have a national alignment on what we want PPSIs to look like. And, while they're still working on some of those rules, this is collectively what everyone has said, this is going to be safe. And then we, go further than that because it's not just about, does the technology work? It's like, what is the issuer? What is their attitude towards risk? What are they doing to further implement controls? And how do we know that it's safe? That's what everybody wants to know. How do we know is custody it's safe? How do we know that these transactions are going to end up where they're supposed to for people who are not familiar with them? And, how do we integrate this into our corporate treasury stack? So a lot of that is something that we've experienced firsthand with our customers, and they are trying to answer these questions for other institutions that they want to do business with. And, we get the firsthand experience of asking our vendors that we work with, like, what are you doing about risk and how do you manage it? So how do we know that we are going to be safe? And that helps us get comfortable with the, partners we work with and, others that we're, considering.
Awesome. We've talked a lot about how to bring crypto integration to traditional insurance. How are we bringing insurance to the crypto industry? What are some examples of businesses that can get their businesses insured, and what can be insured, what can't?
Well, I think that from a base understanding, like, crypto businesses are businesses just like anyone else. And I talk about that kind of like unhealthy relationship that has caused a delay in adoption. If you're a Series B company, you might be thinking more about your next round of funding than what's happening 5 years down the line. But ultimately, risk transfer insurance is a way to smooth out your balance sheet and grow protected. So you have, all the traditional products that you might consider from directors and officers, employment practices, cyber liability, but there's lots of derivatives of those products that apply directly to the crypto industry when you talk about like hot and cold storage for custody, smart contract insurance, staking insurance for slashing. And I think these are the areas where people are starting to focus more on, especially when you talk about all of the on-chain risk we have now. Like, I think that there's still a long way to go, because I think when it comes to on-chain products, like, you and I have talked about vaults. We are operating that space right now. I think the people who are the buyers right now are focused on either using insurance as a tool to like a hedge to hedge their bets on a product, or they're using it as a way to increase their AUM. We want to offset some of this risk so we can take on more of it if we're going to be on different protocols. So you can, insure things like, Oracle manipulation and smart contract failure. But we have to be really careful as a broker and as like an industry leader in helping our clients create some of these products, that we're also not going to completely torch the insurance market, because then we're not going to have an insurance market. And I think when you are looking at a lot of the on-chain stuff, while there might be safe assets, that there's still a lot of unsafe products. And we see that with the, millions and millions that are getting lost in DeFi every month. And the insurers are sitting on the other side of this equation looking at this, and they're like, well, we have no upside. You guys want to pay bips for this insurance, and we want us to put up millions in return, and we're effectively like putting our careers at risk if we write some of these like nasty losses in DeFi. So I think what we're missing right now in terms of being able to scale is institutional grade standards where people around the industry can agree on what a safe operating environment looks like. Because even still, we just talk to a lot of people, customers, non-customers, that want us to insure risk that they're not comfortable taking on. So if your like business is taking risk as a asset manager, hedge fund, something like that, and you're not comfortable with it, like how do you expect the insurers to get comfortable with it? So it's kind of a little bit of a push and pull, but hopefully we're going to have some exciting things to offer in that front that are much more scalable.
I've been able to do some interesting work with like replacing spec reinsurance for medical companies with like vault bonds or something with EtherFi, or doing like liquidity or liquidation insured money markets, thinking of insurance as a line of credit. But those are not actually with insurance companies. They're rather insuring products with a technical moat. How do you think what crypto enables can replace anything, as a last question, from the current insurance market? How do we decentralize insurance?
Well, I think some of it is going to be like private, unregulated products. Like honestly, when you want a regulated insurer to stand in and take some of those bets, like, it goes all the way up through their stack, through reinsurance, through insurance-linked securities, to their, executive leadership and how they approach that. And some of these things, because of certain criteria, are not actually considered to be insurance. Insurance is for unforeseen loss. It's not, typically thought of as a hedge, as an investment product. But it does get treated by investors like insurance, just like sitting at the blackjack table. But I think that, ultimately we'll probably see some of this stuff on chain be more successful scaling in the reinsurance first, because a lot of insurance still operates off chain. Like, you think about whether it's, liability, like what are the triggers? Are they are they parametric? Are they binary, or is it like more complex where you get your lawyers involved and you have to create language and everything? But I know we're out of time, but hopefully some of this was helpful.
Thank you, Glenn.
Thank you, guys.